Sharp swings in sentiment have continued to drive market volatility in the US and by extension around the globe. Good morning and welcome to Moo's The Daily. I'm Michael McCarthy, CEO at Moo Australia. And today we're looking at the earnings reporting season in detail because that's been a key driver of markets, along with some ambiguity around the macro outlook. And so far this week, in the two trading sessions we've seen in the US, we've seen two reversals of sentiment. And there are good reasons for that. The fundamentals are in doubt about the market, although we're seeing excellent earnings results, generally speaking, from US companies during this reporting season, and we're about 80% of the way through the season at the moment. The reality is valuations remain stretched. And so we've got these two opposing forces for investors. We're seeing good momentum in earnings, which generally means higher share prices, but the share prices have already run so hard, investors have doubts about the ability to sustain those higher levels. And that's why we're seeing such enormous swings. Now, add in some macro complexity in tariffs and swinging views of investors about how tariffs will impact the US and the globe, and then add in the potential for a weaker economic outlook to bring lower interest rates, which could be positive for stocks. And you've got plenty of reasons why the market sentiment is swinging and market outlook is swinging with it as well. So we're expecting more of this over the course of this week. Clearly, the interplay of macroeconomic data and interest rates and the interplay of high and stretched valuations versus strong earnings momentum are likely to continue to drive the market. That's why we've got such a focus on the individual results that are being put out. Overnight, we did see a broad decline in financial stocks and, of course, the tech mega caps. The US market doesn't go anywhere without the tech mega caps, and pressure on those stocks after some good post-results trading meant that we saw the broad market fall as well. We also saw July services data that was weaker than expected, and that might have put a bit of a floor under the market during the overnight session because that weaker US data is feeding that and fueling that speculation that we'll soon see lower interest rates in the US, which is, of course, supportive for companies and supportive for stocks generally. So the concern, though, of course, is the tariff situation. We heard further tariffs imposed on chip makers, on chips and pharmaceuticals, and this could affect different countries in different ways, but there's no doubt that the overall thrust of these tariffs is to gum up the global trading network, and that's a negative, generally speaking, for markets. But of course, the taco factor has been remarked upon by many analysts, and the negotiating stance that these impositions represent might mean that the actual economic damage from any tariffs will be a lot lower than headlines are currently suggesting. So with all these conflicting currents in the market, it's no wonder we're seeing such swings. I note too that the swings are getting wider. That is, volatility in the market has increased. Now, higher volatilities mean potentially higher opportunities, higher rewards, but they come at higher risk. And it's an important factor for all investors and traders to be aware of. The high volatility means we're in a higher risk investing and trading environment. Something to keep in mind when looking at activities in the market. So turning to those individual company earnings, because they are such a big driver at the moment, Palantir took the headlines overnight. It is up another 8% after a very good day's trading leading into its result yesterday. So it had edged up in the way the result. The post-market trading had seen another further 4% gain, and that was confirmed in last night's overnight session with an 8% gain during the day session. So Palantir investors clearly very pleased with the quarterly result announced by the company. In other stocks, we saw Pfizer up 5%. Not only did it have a solid quarter, but it raised its forecast for the next couple of quarters, and that upward revision of earnings is one of the key drivers of share prices generally, and it certainly seemed to aid Pfizer's share price overnight. BP up 3.5% after beating expectations on its quarterly earnings. And AMD, unfortunately, a bit of a disappointment. You can see on this chart here why how investors were concerned. On the very far right-hand side of the chart, you can see that red candle. And as you can see from the chart, we had a big run-up in AMD in the lead up to this quarterly result. And what we could be looking at in the overnight session there was a buying of the rumour and a selling of the fact. That is, investors who are optimistic about the quarterly outlook for AMD, bought into the stock before the result was announced. And despite the fact that the announcement, the result was reasonable, certainly in terms of the quarter that we've looked at and the disruption in that sector, while it was a reasonable result, because investors had bought ahead of it, there was no one left to buy and the market came off. So not necessarily a judgment on the result itself, but perhaps a judgment on the action in AMD shares in the lead up to this announcement. So tonight we've got plenty of stocks coming up, and I'd like to draw the distinction tonight between those stocks that will report pre-market. That is, if you're on the east coast of Australia before 11:30 p.m. tonight, they will report. And then we'll see post-market reporting from many companies as well. So that will be, for once again, for those on the east coast of Australia, that will be 6 a.m. tomorrow morning, after 6 a.m. tomorrow morning. So splitting them up in that way, because that might sort of speak to potential investing and trading opportunities. Pre-market tonight, we'll see Novo Nordisk, Disney, McDonald's, Uber and Shopify. So some big names there. Could well see some highly volatile reactions given the underlying market conditions at the moment, and some to watch out for in tonight's US trading session. But then following tonight's session, tomorrow morning, we'll hear from Airbnb, AppLovin and DoorDash. Now, these are not only important individual results, but they'll also speak to the health or otherwise of the US consumer. And that's very important in light of the ISM readings that we saw overnight. At 50.1, the US economy is on a knife edge. It's just about on that dividing line between expansion in the economy, good news, and contraction in the economy. And if it slips under 50, we could have some real concerns about the outlook for the US economy. And we might see some early hints of that in results from groups like Airbnb and DoorDash. So something to look out for in post-market trading tomorrow morning after 6 a.m. East Coast time here in Australia. Those results to not only speak to the individual prospects, but the broader outlook. Looking at the action here in Australia today, after yesterday's gains, we might be under some pressure today. We're up 1.2% trading yesterday, a very solid gain alongside those gains across the region. However, futures are indicating a flat opening today, and given what we saw in the US, we could see some pressure on the Australian share market develop over the trading session. Credit Corp is in the spotlight at the moment. Its shares surged more than 16% in trading yesterday, as you can see on this chart. And this was after its full year results announcement. Now, Credit Corp shares have been under pressure for a long time, down to that low point you can see to the middle right of the chart there earlier this year. And the bounce back since then has been pleasing for investors. Yesterday's result appeared to confirm what that rise in the share price was suggesting. That is an improving outlook for Credit Corp, and that big jump of 16% puts it firmly back in uptrend mode and might attract further investors. Today we'll hear from real estate groups. We've got a couple of the major trusts reporting, Charter Hall Long and the Bunnings Warehouse Trust. Both will likely give a good indication of what's happening in the real estate sector, as will REA Group, the News Corp owned provider of services to those buying and selling homes. And the activity in its business could well speak to the confidence or otherwise of Australian investors.